I would suggest, Eric, expect the ECB unexpected. It's just too pat right now, the analysis of what the ECB is going to do. What's the unexpected for Mr. Draghi?
I think the unexpected would be a sharp and sudden end to the QE program in September. It was pretty clear from the conversation originally that they were going to go to September, then they would sort of phase it out. But the good numbers and some of the noise, and including the December minutes, suggest that maybe they will be harsher and end it a bit faster. But given the environment and the sort of the silliness, if you will, I still think that would be a surprise.
In the U.S., there's the idea that maybe growth will ebb away from the optimism a lot of people feel right now. I don't want to be gloomy about it, but just ebb away. Is European growth, does it have a resilience and integrity to it? Or is there the same worry about, 10th here and 10th there, and pretty soon it's not as buoyant as you would have expected?
No, it's a lot more robust in Europe, Tom. Okay. First of all, remember, in America, you have savings ratios in the private sector, which does 70% of the U.S. GDP. Savings ratios of just 2.5%. And they have been coming down as they fuel and finance, de facto, the reduction in it, finance the private consumption. In Europe, we have pretty steady savings ratios, about 11-12%. And we have the consumption being financed by an increase in real income. So the household sector is a lot healthier, and the corporate sector in Europe did not take all the debt you saw in America over the last, say, 4 years or thereabout. So the corporates are not as vulnerable to higher yields as in America. So we are in pretty good shape in Europe right now.